Hey guys, this is going to be a quick video giving you a recap of what we covered the other night for you students that wanted to get involved in our stock trading simulation. I'm going to give you a recap of how to get going and using TradingView in order to do that, and show you where I'm at and cover a couple of considerations we want to make. Okay, so if you haven't done this before, if you're new to coming in this and you're watching this as a recording, originally we started in tradingview.com. So go up into there and you'll see a page that looks a lot like this one. Yours might be white. I just changed it to dark mode, but yours will look like that. And first thing you want to do is you want to make a free user account. I already have an account, so that'll be hard to see. Let me see what it does here. Yeah, so you go to something like this. You'll click on the basic account and that'll let you get set up. Username, password, basic stuff. You know how to do that. You might get some sort of confirmation in your email, but once you're good to go, create a name for yourself. And then you'll log back in. You go in here and probably log in somewhere about here. My handle on here is FreezerPop, and you can log in, see your profile and all your settings. So then you'll be good to go. So when you go to the home page, you'll see something like this, and it gives you a bunch of top line news, information, things like that. But what we're going to be doing for this unit is each of you are going to be given $10,000. You're welcome. You get to spend that $10,000 on any stocks that you'd like to buy. So you're going to purchase companies that you think are going to do great over the next 12 weeks. So this is all going to be done in paper trading. Paper trading is what we call it when we're just using a demo account or using pretend currency. But the great thing about using TradingView here is that we get to use the software exactly like it would be if you were actually making trades and you were connected to a broker who is holding your money for you and making trades on your behalf. That's what a broker does. They trade for you. They're different from a bank because a bank invests your money in whatever they feel like investing it in, and you hope they give you a return. A broker invests your money as you see fit and in what you're interested in. That's a real short definition. So once we're in this page, log into your account if you've done that. Now up here at the top, you'll see this bar that says ticker. Ticker is another way of saying the symbol for the stock that we want to trade, the symbol for whatever company we want to buy or take a look at. So I'm going to click up here and I'm going to go DIS, which is the symbol for Disney. Okay, and so I can just move myself off of here. This is Disney's stock over the recent few months. You can see the months down here. You can see a time scale down here of how long of a time frame we're looking at. We can always adjust the chart to take a look at that, and we can stretch it out and look at it differently. However, where you're going to be spending most of your time as you do this is going to be in the full featured chart. So once you see something like this, you've gone to a company, you can go into full featured chart right here. And what that's going to do is it's going to open up another app inside of this. Let's see if I can get this to go. There we go. So this is going to show me Disney. Let me see. I've already got this open in another tab. Here we go. So this is Amazon. Up here in the top left-hand corner, I can click on it and I can select a different company. If I want to look at Shopify, I can go in here. Now, if you don't know the ticker symbol, that's okay. Just go ahead and type the name of whatever you're looking at. You know, I type Bob's, right? What is Bob's? I don't know. There's something here that might relate to it. You might find what you're looking for. Okay. So if I'm looking for Wrigley, you know, I can find, I thought I could find Wrigley. Let's try it. Let's try GE. There we go. There's GE. Okay. So now we have GE, comes up General Electric. It's traded on the New York Stock Exchange. So over here, select one that has an American flag. That means it's being traded here in the US. There's different places in the world where you can trade. We're going to be pretending we're trading only in the US on the US exchanges. So as long as it says has an American flag, you'll be fine. It'll be the NYSE or it'll be NASDAQ or something like that. Here's one that's in NASDAQ right here. Generally, NASDAQ tends to be technical companies. Doesn't matter. Either one is fine. You just find the one you're looking for. You're like, okay, I want to do GE. No, you know what? I want to do McDonald's. Okay, so you can start typing it if you want. The ticker for McDonald's is MCD. Got it right there. It's on the New York Stock Exchange. So I'm going to click it. And now I can see McDonald's. Now I want to go up here to the top and I want to click on the D. That's for 1 day. That's going to mean each one of these bars represents 1 day's worth of trading. Okay. At the top, remove my drawings. I can slide this axis. Yours might be on the other side of the screen. I can slide it up and down if I want to see things a little better. I can also slide this one back and forth if I want to see more or fewer days in time. And this is called a candle chart, but you can also come up here and click on these little candles right here, and you can see different kinds of charts. The only ones you really need to worry about at this point is the closing price. And if I click a line chart, I see the closing price of McDonald's for each day that it traded. This tells me what it closed at. The next day it trades, it bounces all over. It doesn't matter on a line chart if it comes way up here. If it closes right here, then that's where they put the line. So this shows us closing prices. That's important to us only because that's how people might trade it. They might look only at closing prices. Banks, big institutions, they don't really care what happens during the day or intraday. They care what happens at the end of the day. And so they might be looking at it like that. You can also look at bars, which is pretty handy. It's hard to see on this screen, so I probably won't use this a ton unless I thicken them up for you. But essentially with bars, you can see the high and the low is the two extremes of the bar, as well as the open and the close. The open is the little dash of the bar that you come in at, so to speak, on the left-hand side of the bar. And the closing price is the little dash on the right-hand side as it goes out. So with the bar chart, you can see the open, you can see the high, you can see the low, and you can see the close. And that's important to some people in trading as well. I'm going to switch back over here to candles, and you may notice that candles look an awful lot like bar charts. That's because they're the same information. The open is on a green one, which means it ended higher for the day than it opened, and a red one means it ended lower. That's all it means. So on a green one, if I take this low green one right here, the open was the bottom of the body of this candle. The high was the very top extreme of the wick of this candle up here. The low was the lowest part of this wick, the extent that it went there. And then the close was wherever the candle ended at the top. Because it's a green one, we know that the open was the bottom and the top was, the close was the top. Because it's green, we know it went up for the day. On a red one, such as this big boy here, we know that it opened here. The high at whatever point during the day was right up here at the top of the wick. The low was down here at the bottom of the wick, and the close was right there. Now, if you ever wanted to actually dive into one candle even deeper, you certainly could. Right now, the market is open, and the current price of McDonald's is $209.77, and it's right there. Okay, so if it were to close right now, then that's where the top of that candle would be. And that's why that price line is always right at the edge of this candle, because this is the current closing price if it were to close right now. Of course, it's going to bounce around a little more. Now, if we wanted to dive deeper and you wanted to take another look at it for fun, it's not really that important for a 12-week study, but you could always go up here and click on 4 hour, and you would see a 4 hour candle. Each one of these candles represents 4 hours. If I click on 1 hour, now each candle represents 1 hour of trading time. And you might see some faint blue lines on my screen. They may be a different color on your screen, but that's showing you the whole day. Okay, so today I can see the 1 hour charts, and I can see 1, 2, 3, 4 candles, right? This one is the first one here, and I just look down here at the bottom, it says 9:30. And then this one is 10:30, 11:30, 12:30. This is East Coast time. And you can see how they're starting to get really thin and small. And that means there's not a lot of trading going on. They went up, they went down, and they kind of ended up in the same spot. It means a lot of traders are kind of closing their positions, and they're not really going to do a whole lot today because today is Friday and they just want to get done. Banks want to square up for the weekend, and everybody wants to go home. So there's not going to be a lot of action today. Midweek tends to be busier for trading. But anyway, so we're looking at a 1 hour chart. Now you can scale this all the way down, right? Here's 30 minute, here's 5 minute. Now each of these bars is actually a 5 minute chart. So take a look at this run up right here and see how it came down from about $212 all the way down to the bottom of about $207, okay? Started up here, came down here. These are every 5 minutes, all the way down, right? And this is our day that started right here at the bottom. So if I go back over here to 1 hour, we can see this same movement. If I don't even readjust the scale, up here, here's around 212. Here's the bottom where it opened today. So all this 5 minutes now have been compressed down where we're only seeing 1 bar for every 1 hour. Now, if we compress it even further, it gets a little hard to see. So I'm going to scale it down a little bit here. But that's essentially the same thing that we're seeing, right? When you saw that 5-minute run come all the way down, that was this red bar right here. It's all been compressed inside this red bar. Okay, it started up here, came all the way down here, and then today when the market opened, you saw it kind of run back up in a diagonal line. That's this bar here. This bar is representing everything that happened only today. All right, enough about that. I was just going to show you how to make your trades, and I got all rabbit trailed talking about how it works. So for you guys to set up your paper trading account, I want you to go down here to the bottom, and you might need to select on a little panel that says Open Trading Panel, where you select your broker. Okay, I've already got paper trading selected, so I don't see that. But let me show you. When you go to select your broker, you will see a broker list like this. These are all real brokers except this one on the far left. Okay, so you could conceivably connect with them. You would wire them money. They would hold your money for you. You would make trades through this platform, and then they would be making those trades on your behalf, or their electronic system would be doing it. Okay, so we're going to connect with paper trading right here. Click on the connect button. That's going to set you up with paper trading. Now it's going to ask you, it's going to start you off, and it's going to say, okay, we're going to start you off with $100,000. I want you to go in and change that to $10,000. I'm not feeling that generous today, right? We're only starting this simulation with $10,000 only. So change that number to $10,000 and hit OK. I'm not going to hit reset because I'll lose my trades that I've got here. Now, in here, you can see the trades that I set up for last night. And we set them all in motion. And after setting those in motion, my open profit is negative $97. So I'm in the hole. So I got to sit tight and wait. We're not going to be closing trades. We're not going to be strategizing. We're doing any of that in this simulation for class. We're just going to spend 12 weeks picking 10 of the companies you think are your favorite companies that you think are going to increase in value over the next 12 weeks. And then at the end of 12 weeks, we're going to see where everybody's at and see what you see how you guys did. Okay. So pick 10 companies, try to distribute your $10,000 fairly evenly over the 10 different companies, just because it's like the old adage, you don't want to put all your eggs in one basket, right? You don't want to have all of your money in one stock that plummets. Like say, for example, you bought GameStop yesterday afternoon and you put most of your money in that. You'd be hurting, right? Because GameStop suddenly shot up on news. And now, of course, everybody that was in the money with that gets really excited about it. And so they start selling so they can take their profit. And when people sell, then the price comes back down. So you don't want all your eggs in one basket. You want to kind of spread them out. You won't be able to do it completely evenly, of course, because take a look at this. The share price, I bought one share of Amazon, and the share price, the fill price, was $3,124. Okay, they let their share price run all the way up to $3,000. Google as well. I bought one share for $17.30. Well, I've already blown through about $5,000 of my budget, so I'm not going to be able to spend as much on the other companies, and that's okay. Try to spread it out as much as you can. Again, the idea is that you're pretending that you're mitigating your risk and spreading your risk out. So I bought 2 shares of Zoom at $398 or so. I bought 6 shares of Apple at $128, and I bought 20 shares of GameStop at $38. Yeah, I'm losing money there too. So don't worry about the share price per se as it pertains to the value of the company. That's not really how it works. Back in the day, 20, 30 years ago, everybody wanted their share price to be between, $8 and $20 or something like that. And a lower share price simply means that it's easier for you to get in. It's easier for people to buy smaller amounts if they want to. When companies' share price would start to go quite a ways up, company does great, they get up to 50, they get up to 100, they would do a split. And so if you owned 10 shares of something and it was $100 a share, and they said, we're doing a stock split, they would split it in half. They would say, okay, now we've split it. Our share price now is $50. It cuts it in half, but you own twice as many shares. So now I have 20 shares. So the value of what I own didn't change at all. It's just the share price changed just to keep things a little more easier to understand. In recent years, Amazon, Google, places, they don't mind letting their share price run way up for whatever reason. Maybe it makes them feel great. Maybe it helps weed out people that are going to be doing a lot of small trades because you have to have at least that much money to buy only one share. But for whatever reason, they let it run up and they didn't do a split. It doesn't really matter. It doesn't make any difference. For us, the value of a company is not directly tied to the price of the share, although certainly a small company, a dangerous company, a company that is weak, may certainly have a small share price. So that it doesn't mean that if they are trading at $2 a share, it's a safe company, it's a safe bet. It certainly doesn't mean that. But it also doesn't mean that a company with a share price of $3,000 is always going to be better than a company with a share price of $20 because they could have split their shares down just to make them more manageable. Anyway, so what you'll do is when you want to make a trade, you'll come in here. Now this is during market hours. I'll show you what to do if we're not during market hours. But since the market is open, what we can do is say I'm going to buy I don't have any of McDonald's, so I'm just going to buy some McDonald's here for mine because I'm looking at it on the daily chart and I'm thinking, okay, yeah, McDonald's, it's been kind of going up-ish, right? You know, I think it's going to do okay. It's kind of coming down lately, but maybe I think it's going to go back up, right? So I'm going to come up here and I'm just going to click on this blue button right here. That's buy at the market. And it says buy market or sell market is the red one. When you click on buy market, it's going to open this panel and this is going to let you say how many shares you want to buy. Market just means at market price. As soon as I hit go, it's going to buy that at whatever price the market currently is at. There's also two other types of orders. Well, there's a couple modifications, but there's limit orders and there's stop orders. And those simply are orders that you can pre-plan, you put them in place, and when the market price gets to a certain level, it will trigger those. So we're not going to talk about that today. You just need to worry about buying at whatever price you want. So McDonald's is trading at about $210. We want to spend about $1,000. So you can grab your calculator. You know, if say, well, I don't have $1,000 to spend because I spent so much on Amazon and Google already. So let's say I'm going to roughly say about, you know, maybe $700 to $800 or something like that. So I can just take my $700 and I'm just using a calculator here. And I'm just going to divide it by 210 and I end up getting 3.3, you know. So I'm like, okay, well, let me try 3 shares. So you can pop 3 in there and it's actually going to tell you right down here below. It'll say the trade value of what I just put in, 3 shares of McDonald's trade value is going to be $630.33. That's what it's going to cost me to buy 3 shares of McDonald's. And so if I still have money left and I say, yep, that's good, that's what I want to do, I want to buy McDonald's, then I'll buy that. So I'm going to do that. I'm going to buy 3 shares of McDonald's. And it tells me I just purchased that in my account. So now I can see over here, it says 3, that's my position. It says negative 21 cents. That means I'm 21 cents in the hole. I've already lost money on it. And it shows me a little arrow here and it says, this is where I bought it. Okay, and you'll see that. And this will stay right here as the price goes up and down. If the price goes up, it'll show me that I have a positive amount. And if it goes down, it'll show me that I'm a negative amount. Down here in my paper trading tab down at the bottom, if I go over here to the far left-hand side, I click on positions. It tells me all the different positions I currently have, what I currently own. Okay, so if I look in here and I look at McDonald's, it's right here. Actually, if you click on any of them too, it'll change your chart if you want to take a look at them, if you want to navigate it that way. Okay, if I look at McDonald's, it says the side is buy. It's either buy or sell, right? So I bought McDonald's. Quantity, I bought 3 shares of McDonald's. My average fill price, because you don't always get the exact price you thought you wanted or that you exactly wanted. You say, I want the best price possible at the market price. Or it may have filled my 3 shares at slightly different prices because the market is constantly moving. So it may have gotten 2 of them in at 210.05, and then the market moved and it got the third one in at 210 and 10 cents. And so it says, okay, the average share price that you got in at is 210.07, right? It's telling you the average between your 3 shares. So it doesn't matter for our purposes, really. We're just going to round to the nearest dollar anyway, usually. So about $210 is what I got for my average price per share. And it tells me the last price I had, and it tells me my current value, okay, my profit. My profit in McDonald's is negative 21 cents. Now you might say, well, that's not fair. The minute you bought that thing, you were at negative 21 cents profit, and it should have been at 0, right? Because we're just starting off. It's not. It's like buying a new car. You buy your car, you drive off the used car or the new car lot. It's probably more applicable to used cars too. You drive off the lot, right? You bought your new car for $10,000. You drive off the lot and you drive it for 2 months and you keep it in perfect condition. Maybe you just put it in your garage and you drive back to the place and you say, hey, I don't think I want this car that I paid $10,000 for, right? Well, if it's mint condition, it's going to be more expensive than that. But for example, you drive your $10,000 car back to the car lot. You say, I'd like to give it back to you. I want to sell it back to you for $10,000. I haven't done anything with it. And the guy at the car place says, I'll give you $9,500. And you say, well, wait a minute, I didn't even do anything with this car. It's in perfect condition. And he says, yeah, but that's how I make money. That's my spread. His spread is the difference between what he's willing to buy a car for and what he's willing to sell a car at. And just like you, if you had a whole bunch of coffee mugs you got at the dollar store because they were super funny, right? You took them to your friends and you are going to say to your friends, hey, I want to sell these coffee mugs to you guys, take them to a game, and I'm going to sell these. What are you going to sell them for? Are you going to sell them for $1? No, you're going to sell them for more than $1 because the coffee mug is just a way for you to get coffee mugs in people's hand and make a business transaction. So it's a good deal for everybody. They got a coffee mug and they spent $2. You sold it to them for $2. It was a good deal for you because you bought them for $1. You got to keep that profit. They get to keep a great coffee mug at $2 and everybody wins. Everybody gets something of value in good business. Okay, so that's what's happening here. This is the spread. The minute I buy that, the spread, the difference between the sell price and the buy price right here is what's going to cause me to lose money immediately from it. Okay, and you can see right here in between, that's telling me what the spread is, the difference. And you can see it's 9 cents. Well, now it's down to 4 cents. So it's constantly fluctuating. But when I first jumped in, it was 21 cents, right? Which is exactly divisible by 3, which means the spread probably was 7 cents spread for each of my shares. So each share, I lost 7 cents on that transaction. And so I started at 21 cents in the hole. Now, of course, the hope is that the stock rises, and that's not a problem. They get their cut and everything's all good. So that's why you'll see that. Now, one thing that is a little bit tricky here with paper trading that you need to think about, the account balance on here says $10,000, and it's going to continue to say $10,000, excuse me, until we sell, until we close out the whole thing at the end of our trading simulation. That's because we're not really using real money, and this is how they've set it up in TradingView. So you're going to have to do a little math in order to actually figure out how much money you have to spend. I was hoping that it would show you as you order these, it would kind of show you what's left in your bucket to spend. It's not going to be as straightforward as that. You're going to have to do the math in order to actually figure out when you've spent your $10,000. So what I want you to do is go in here and say we're looking at Amazon. We bought one at 3,124. Just take these all down on a calculator or on a piece of paper and multiply them all out, right? I have 20 shares of GameStop at 38.23. So I'm just going to go in here and I'm going to multiply 20 times 38. I'm going to ignore the cents. Okay, so about $760. I have about $760 invested in GameStop. I have 6 shares of Apple at 128.70. We'll call it 129. So 129 times 6. Okay, I have 774 shares of Apple. I mean, when I bought these, I was intentionally trying to kind of land somewhere south of $1,000, right? So I need to add all these up before I make any more trades and make sure that I haven't gone over my $10,000 limit. Okay, so once I hit $10,000 or just under $10,000, I'm going to stop. But I need to add this up, and actually I don't actually know what it is right now. I'll add it all up and I'll find out. And if I have leftover money, I might have another $100 or $200, you know, whatever left over. I might find another smaller one and buy it because I have bought 1, 2, 3, 4, 5, 6, 7. Okay, I have 3 to go. I still need to buy shares of 3 more companies with whatever money I have left. And hopefully I've got something left that I haven't gone over yet. Okay, so that's how you do that. Just multiply them out, multiply your fill price or what you think your fill price will be, whatever the current price is, by the number of shares you're going to get. And that's how much you've got invested into that one. And you can always go back and figure it out right here on this panel by taking your quantity of shares times your fill price. That's going to tell you what you've spent on that company. Add these all up and you will find out how close you are to hitting your $10,000 limit for our simulation. Okay, last thing I want to talk to you about right now on this video is what happens if I want to make my purchase this weekend and the market's closed. It's going to give you an error if you try to do that, and you're going to say, wait, what's going on? The market's going to close today at about 1 p.m. Eastern time. I'm sorry, 1 p.m. Pacific time, 4 p.m. Eastern time, I believe. And so when you try to make a trade, it's not going to happen. So it'll give you an error. So what you'll need to do if you want that to be ready for Monday morning, the easy way is Monday morning, just go make your trades during trading hours. But if you want to be able to set it up over the weekend, you don't want to have to think about that. What you'll want to do is you'll come in and above where the current price is, anywhere above it, click on it, right click on it, or you can go up here and open this panel if you want to. I think this panel will open again automatically if you click on the buy button. Yeah, it does. Okay. So I'm going to right click on it up here and I'm going to say trade and I'm going to say buy. because I want to buy, I'm pretending now, I'm not going to buy more McDonald's, but I'm going to buy it. But instead of a market order right here, which is what that would be if we were just to say buy it right now, whatever the price is, instead of a market order, I would put a limit order, okay? And where I clicked with my mouse, the reason I like to use my mouse is because wherever I click is where I'm saying that's my price, that's what I want to pay, okay? So I clicked in there and it said $209.95. When I clicked over, I went over to market, so it made it a market order. It says $209.95. That's the current price, or pretty close to it. So I'm going to run that way up, and it tells you here's the last price right there, actually. I'm going to run way up here. I'm going to go 210.37, okay? It's quite a bit higher. It's not crazy high. Now let's just go 220. All right, 220.37, a limit order. And I'm just going to say one share for now because I'm not actually going to take this trade. So what it's going to do when I click on this, it's going to put an order. Uh-oh, that shouldn't have happened. It didn't let me. Oh, it did let me do it because the market's open. I can't show you. I forgot. Okay, well, that's a good experiment. I was going to put in a limit order for the McDonald's stock, and it would sit up here and it would wait until the market opened. I did this last night, and of course it put my order in here after the market was closed. But you saw how it immediately filled my order, and the reason was because a limit order says, hey, I want whatever price I designated, like say right here I'm at 223. I say I want this price or anything better. Okay, so they were willing to give me a better price because what's the current price of McDonald's? Current price of McDonald's is actually only 210. So if I say a limit order up here at 224, I say I want to pay 224 or better. They say no problem. How about 210? So they immediately filled my order. Okay, so that's what a limit order does. Now after hours, when you do this, it will sit up here because the market will be closed, and so it won't fill. But as soon as the market opens, provided that nothing crazy has happened in the world, and nothing crazy ever happens in our world, right? Provided nothing crazy happens with the market and it opens somewhere in this general area, it's going to sit there and just wait for this, or it's not going to sit there. This order is a limit order, and a limit order is going to say, give me this price or anything below that. And it will say, I've got one below it, and it'll immediately fill your orders. And that's how you can set up all your orders over the weekend or after hours. Always just, the shorthand of what I'm saying is use a limit order, put it above your current price, significantly above your current price. When the market opens back up, as soon as the market opens, it will go ahead and fill that order. So that's how a limit order works. The other order is a stop order, and that's more of a trigger when the price crosses that. But you can do some research on that if you guys are interested in knowing more about that, or we'll do another Zoom call or something like that. But that's getting into kind of next level stuff. For now, here's the gist of your simulation that I want you guys to take away for what you're doing for your class. $10,000. Split it in about, well, pick 10 companies, split it as evenly as you can in general, so that you don't put all your eggs in one basket. That's smart, you know. Paper trading on TradingView, you'll buy the different companies that you want. At the end of 12 weeks, I want you to see where you're at, okay? Buy companies that you like, that you know something about, that you have an interest in. Buy companies you think are gonna do well. Here's the easiest, most basic way to evaluate the technical analysis of this. Is the stock going up? Has it been going up? Great, that one might be a good one to do. Is it going down and it's continuing to go down? That might not be a good one to do. Okay, that's the most basic intuitive way to understand them. It doesn't mean it's always going to work, certainly not by any means, but eyeballing it does give you a leg up more so than simply being random and just randomly picking them. So that's about it. We'll see how you're doing. There is a chat on the side, and we're trying to figure out a way that you all can actually talk to each other and share with each other where you're at currently. I think some of the guys are just taking a screenshot of their open profit and texting it to each other. But there is chat here. There's a private chat where if you know the handle name or the username of the person you want to chat with, you can also chat with them in that window. But we might try to set something up where you guys can all share how you're doing and talk about it. So feel free to get in touch with me if you guys have any questions about what you're doing, or if you get stuck and stumped and you're not quite sure where to go with it and you want to be involved in this, but you just can't figure it out. Let me know and we'll go from there. Have a good time, guys.